morning, dear students. Good morning, everyone.
Good morning.
Good morning. So, in today's session, we'll be starting with the topic of mutual funds. We have covered till now quite a good number of topics and a lot of concepts in financial or advanced financial management. The last thing that we did was about the portfolio management, right? So, there we have seen various concepts. How do we create an efficient portfolio? How to calculate the rate of return as per CAPM, as per arbitrage pricing theory, as per sharp single index model. So now those portfolio management techniques are going to be used by the portfolio manager. Now, who's going to be a portfolio manager? Basically, the fund manager who's going to manage the mutual funds, right? So primarily, the tools of portfolio management, the techniques of portfolio management are used by our fund managers, right? So this topic is very apt to begin once the portfolio management technique is done, portfolio management chapter is done. So let's understand, let's get started with the topic of mutual funds. Okay, mutual funds. Now, what do you mean by the term mutual funds? What do we have an understanding of mutual fund? Yes? Anyone?
Mutual funds is the pooling of funds which are then invested together into securities of multiple various companies. Securities, yes.
Okay, so mutual funds is like pooling of funds from various sources and then investing into multiple areas. So let's first try to understand what is the structure with which a mutual fund function, and then we will go about discussing the the practical aspect of it. Now, when you want to start with a mutual fund, you always need a sponsor. So the story of mutual fund start with a sponsor. Right? So the story of mutual fund starts with a sponsor. So in our case, let's say the sponsor is State Bank of India Limited, right? And this bank is having, let's say, 10 crores as funds available for investing. So the sponsor, which is State Bank of India Limited, is having 10 crores available for investment, right? Now, with this 10 crores of capital, this sponsor, with 10 crores of capital, this sponsor wants to start with a mutual fund. With the amount of this capital, the sponsor wants to start with a mutual fund. Now, of course, if it wants to start with a mutual fund, whom should it be approaching? If it wants to start with a mutual fund, whom should it be approaching?
Public at large?
Public at large, definitely. So you approach the public at large, right? And you ask them that, listen, we're going to start with a mutual fund, right? And that mutual fund is going to be investing into certain securities, category of securities, maybe let's say large cap or mid cap companies. You please contribute to our mutual fund. And the scheme or the process by which the sponsor approaches the public at large is called as NFO, new fund offer. What is the thing that we call when we are looking at the raising of funds by a public limited company from the public at large?
IPO.
IPO. Same way.
Initial.
When a mutual fund approaches the public at large with an offer, that's called as a NFO or new fund offer. Okay. Now, of course, the public will read all you will be investing. What are the securities that you're going to choose? What is the tenure of your investment? Right. So you come up with this NFO with proper disclosure about all the activities that the mutual fund is going to do. And then the public at large is going to provide money. The public at large is going to provide money. But that money, does it belong to the sponsor? No. The money belongs to the public at large. Now, since the money belongs to the public at large, the money has to be kept in a bona fide way. And that money, let's say the money given by the public is 990 crores. Right, so 990 crores is there. In fact, the sponsor also transfers its 10 crore to the mutual fund, which we call it as SBI mutual fund. And this entity is going to be established as a trust. You can't be establishing this as a partnership or anything. You have to establish it as a trust, because when you establish it as a trust, you are being entrusted, you are being given the responsibility of looking after this 990 crores which belongs to the public. Okay. Now, obviously, people, the public at large has given 990 crores to SBI. They should get some sort of acknowledgement as to, whatever they have paid. So when the public has given 990 crores, against that, the mutual fund is going to give to the public. Mutual fund is going to give to the public units. When the public has given 990 crores to the SBI, in its return, mutual fund is going to provide units to the public at large. Maybe we can think of, 99 crore units. 99 crore units. So SBI Mutual Fund Trust, it's going to be entrusting 99 crore units to the public at large. Okay, 99 crore units to the public at large. That's your SBI Mutual Fund Trust has given the units. Now, what is the total money that this mutual fund is having?
1,000 crores.
1,000 crores. That 1,000 crores will be in turn transferred to a company which is responsible for managing the funds. So this entire 1,000 crore will be given to asset management company, which is going to be headed by a portfolio manager, right? Which is going to be headed by a fund manager, and that fund manager is entrusted with the task of managing this entire 1,000 crores. So this AMC, asset management company, is going to look after all these trust activities, or you can say all the management of the 1,000 crores. The entire portfolio is going to be managed by these entities, right? So basically, we have a trust which is going to look after this 1,000 crores, right? Whether the AMC is managing properly or not, right? Right. This is what a structure is. But apart from that, there are many other entities, which are actually involved. There are many other entities which are actually involved in this mutual fund. There's someone called as also a distributor. Okay. Now, this distributor is actually going to work for the sponsor. This distributor is actually going to work for the sponsor, because distributor is the person who is going to ask for, or who is going to distribute the units of mutual fund to the public at large. So distributor is something who's going to interact with the public on behalf of the sponsor. Right? So distributor is going to be interacting with the sponsor and the public at large, because sponsor will be giving some sort of rights to the distributor to sell the units in the NFO process, right? That's a distributor which we have. Then the next type of entity which is going to be involved in this entire process is what we call as registrar and transfer agents. So these are the entities who are going to be responsible for transfer of the securities, like whatever the AMC is undertaking, whatever the AMC is doing the activity, buying and selling of shares, collecting of money from the market, payment of terms. So everything is going to be looked after by this transfer agent. And as an example for this transfer agent, we can have CAMS. It's a listed entity which is into the business of being a registrar and transfer agent. Then once the securities are bought, those securities also needs to be held or should be in the possession of someone, right? So that is going to be the custodian of securities. Okay, so it's a custodian, which means the person who is going to possess the securities. Right, so possessor of the securities. So we may have a possessor of securities as maybe a HDFC bank. So you'll appoint some other bank as a custodian. Now, why do we need to have a custodian? For the purpose of security and safety, right? Because when the mutual fund has given money to AMC can come up with its own disclosure that this is the amount of securities we have, this is the amount of cash that we have. But we need a confirmation from a third party. And that third party is basically the custodian of the securities, right? Because AMC is not going to be, same parent entity having the same parent entity as the custodian. So custodian will be a third party who is going to hold the securities. And obviously, if it's a third party who's going to hold the securities, we can definitely rely on the disclosures given by the custodian, right? So this is how the fund. Yeah, Sanjay.
In whose name are these securities held?
Sorry.
In whose name are these securities held in this whole?
Securities are held in the name of the SBI mutual fund.
Okay.
Held in the name of mutual fund, but held by the custodian.
Okay. And what is CAMS? CAMS, CAMS?
CAMS is the name of the company which acts as a registrar and transfer agent.
Okay.
It's one of the companies which looks after this registrar and transfer agent task. So whenever the mutual fund sells any securities, buys any securities, whether the securities have been truly credited to the custodian, or the money that has been due, has it been recovered from the market? So all those activities are ensured by this registrar and transfer agent. Clear?
Clear.
Okay. So this is how the mutual fund structure generally works, right? Now, you might have heard of something, called as net asset value of a fund, right? Have you heard of this?
Yes.
Right. So let us see how is this net asset value really derived at. Let's take the same case as our mutual fund, wherein we have raised, let's say, 1,000 crores. Okay. So funds raised is 1,000 crores. Okay. So funds raised is 1,000 crores. Now, out of this 1,000 crores, the funds which we have raised out of this 1,000 crores, we are definitely going to invest into multiple areas. Right? So let us say, where are we going to invest? So we bought certain shares and we have certain amount of cash also. So in the shares we have, let's say we've got certain shares like Reliance Industries, Infosys, or DCS, L&T, let's say, and the balance we are maintaining, let's say, cash for the simplicity. So suppose we bought Reliance shares at a price of rupees 3,000, Infosys shares at a price of let's say 3,200, TCS shares at a price of let's say 2,800, L&T at a price of 560, right? So we bought certain shares. So let's say 3,000 into, we bought 20 lakh shares of Reliance Industries Limited. So how much money is invested into Reliance Industries Limited, guys? Tell me. 20 lakhs into 3,000.
600 crores.
Okay. So 3,000 into 20 lakhs. That's 600 crores. Okay, I need to change the number. Wait. Let's keep it as 10 lakh shares only. So can I say it will be 300 crores? Right?
Right.
Then let's say we have got 2 lakh shares of Infosys. So 3,200 into 2 lakh. That's what? 64 crores?
Yes, 64 crores.
Right. TCS, let's say we've got 6 lakh shares. So 2,800 into 6 lakh.
168 crores.
168 crores. And let's say 560 price L&T. We have got, 15 lakh shares of it. So 560 into 15 lakh.
84 crores.
84 crores. This is the amount of initial investment that we made. So out of 1,000 crores, this is what we have invested. What is the balance of cash that we are left with? What is the balance of cash that we are left with?
384 crores.
384. So 1,000 minus 300 minus 64 minus 168 minus 84. Yeah, 384 crores of cash is something that we are left with. Okay. Now this entire thing happens on days. Now let us say after 30 days. After 30 days, we have Reliance Industries Limited shares, we have Infosys shares, we have TCS, we have L&T, we have some amount of cash balance, right? Now I'm just giving you, there's no buy and sell of any other security happening. I'm just giving you the market price per share of each one of them. So market price is 3,000. Sorry, my bad. Market price is 3,500. This is 2,900. This is 4,000. And this has become 750, right? Then some additional information I'm giving you. Expenses during month is, let's say, 50 crores, out of which 45 crores has been paid. Okay. So expenses is like we have spent 50 crores, and out of that 45 crores have been paid, which means 5 crores is still outstanding. Okay. And dividend declared by all companies amount to dividend which is declared by all companies amount to 10 crores, out of which 8 crores have been received. Okay, so this is the information that I'm providing you. So after 30 days, these are the prices, right? During the year, during the period of 30 days, we have paid a cash. I mean, there's a cash expenditure which is happening. Cash expenditure would be, salary to your staff, salary to your fund manager, any sort of SEBI fees and all. So that amounts to 50 crores, out of which 45 crores is something that we have paid out. Similarly, dividend which has been declared by all the companies, this amounts to 10 crores, out of which 8 crores have been received by us. So over here, like in this case, on day 0, I can definitely say that here the NAV is the total 1,000 crores, because this is the total asset as on first day 0, 1,000 crores divided by how many units we would be issuing? 100 crore units. 1,000 crore rupee, and this is 100 crore units. That is going to be 10 rupee. So initial day NAV is 10 rupee. Can you calculate the net asset value after 30 days with all the information available? Just try to calculate the NAV. NAV means net asset. Net asset means what? Total of assets minus liabilities. Yep. So calculate what would be the NAV after 30 days, guys.
Okay.
You need to multiply the price with the number of shares that we had, take a total of it, adjust the cash for the expenditure and the income, add some outstanding income, outstanding expenses and accrued income, and then we just take the net figure of all of them. Yep. Are you able to calculate? Are you calculating or not?
Yes.
Yeah. Okay.
The NAV comes to 11.075.
11.075. Okay. So after 30 days, the number of shares will be multiplied by 10 lakh, 2 lakh, 6 lakh, 15 lakhs. So this is what, 350 crores 100 into 2 lakhs. So
58.
what will be 384? Right, so 384 is something which had a balance. We have received an income of 8 crores and we are paying out 45 crores. So 347. 347 crores is the value of the cash that we have. Correct? And this is not the asset. This is not the only asset that the company is having. The company is also having some other asset, which is income receivable. Income receivable. So dividends declared was 10, out of which 8 crores have been received. So out of 10, 8 has been received. 2 is yet to be received. So this is the income receivable. Less, we'll have to subtract outstanding expenses, which is obviously our liability. So this is 50 crores, out of which 45 has been paid. So 5 crores is something which is pending. Right? So taking a total of them, what will be the net asset value? Take a total. 350 plus 58 plus 240
1114.5.
112.5 plus 347 plus 2 minus 5, which is 1104.5. So NAV per unit will be 1104.5 divided by 100 crores. So that's going to be 11.045. Got it?
Yes.
This is how the NAV is, updated on a daily basis. So on a daily basis, the prices are, updated. The portfolio value is updated. Any cash balance is adjusted. All the income and expenses are adjusted, and then you have the net asset value available for you. Clear, everyone?
Clear.
Yes. Okay. So now, let us simply go ahead initially with the practical problems. We'll discuss about the types of mutual funds, as and when we proceed with the topic. There are various types of mutual fund like large cap, mid cap, small cap, hybrid fund, equity fund, debt fund. So a lot of things are there, but we'll take that up, slowly and steadily later on. Let's just try to begin with the practical problems, the assignment part. So let me just, begin with this first question. Okay, so this is something, very much a debatable question, or, a question which normally comes to our mind. So let's say if Mr. A can earn 60%, so A can earn 16% by investing in equity shares on his own. So this investor A is confident that he can earn 16% by investing on his own with his limited knowledge. Now he is considering a recently announced equity-based mutual fund scheme in which initial expenses are 5.5%, and annual recurring expenses are 1.5%. How much should the mutual fund earn to provide Mr. A return of 16%? So we have to calculate what should be the amount or what should be the return earned by the mutual fund so that to provide Mr. A return of 16%. Okay. So we would have said, what is the personal earning that Mr. A would have made? Personal earning of Mr. A is 16%. So this Mr. A can earn on his own an amount of a return of 16%. So this simply means 1 rupee investment will earn rupees 0.16. So 1 rupee investment is going to earn rupees 0.16 in 1 year. Or I can say in the first year, 1 rupee of investment is going to earn 0.16. Okay. And the question says, what is the initial expense that we have? Initial expense for investment in mutual fund, which is 5.5%. Now, what do you understand by this 5.5% as the initial investment expense? These are the expenses which you need to bear for establishing the fund, or fund establishment expenses are 5.5%. Fund establishment expense. Now, what do you mean by fund establishment expense? When you start a fund, you need to obviously, like in our case, we collected this entire money and we kept that 1,000 crores is available, but essentially the entire 384 crores cash won't be available with the mutual fund on the very first day, because it needs to pay certain fees, pay some sort of commission, brokerage, SEBI fees, stamp duty, and all such transaction expenses will be there. Maybe out of 384 crores, 10 crores will be spent out on that. Okay, so therefore, they say over here that whatever money you're going to collect, out of that 5.5% is going to be a straight away initial expense. So which means 100 rupee invested today will not be put into the market. Rather, 94.5 is only going to be invested into the market. Okay. But apart from that, it's not that a case that only the initial expense is going to be involved. What we are going to have is also a recurring expense. So every year, we are going to have a recurring expenditure of 1.5%. Every year, we are going to have a recurring expenditure of 1.5%. Okay. So recurring expense of 1.5% is obviously going to be the case, right? So whatever the mutual fund earns, out of that 1.5% needs to be paid out as expenditure. Okay. So we have the investor giving money to the mutual fund and mutual fund investing money into the portfolio. So the investor gives to the mutual fund 100 rupee. How much is mutual fund going to invest into the portfolio?
93.
93. How? How come 93?
Initial expense 5.5%, recurring expense.
No, but when you're going to invest into the portfolio, only the initial expense is going to be subtracted. After 1 year has expired, you will be incurring this expense. But the money that goes into the portfolio, it's going to be 94.5. Because the rest 5.5, 5.5, it goes as a initial expense. Okay. So out of 100, 5.5 rupees is going into initial expense. 94.5 is going into the portfolio. Okay. So 100 rupee investment goes to the mutual fund. 94.5, goes to the portfolio. And then the mutual fund again, 5.5 is being put into the initial expenditure. Okay.
Right.
Now, the portfolio is going to perform. The portfolio is going to generate some sort of returns on that, right? And, this portfolio, a return of one, it's going to generate some return. But out of that return, whatever is generated, right? We need to pay 1.5% on that. And our investor is very clear. Our investor is definitely going to, it's very clear. What is the rate of return that an investor require?
16%.
How much? 16, right?
16%.
16. So the portfolio should be actually generating some sort of returns. Right? Portfolio should be generating some sort of return, out of which you need to obviously pay some sort of expenditure. Right? You need to pay some sort of expenditure. And also, this return should be sufficient to compensate our investor with how much percent? How much return, guys?
16%.
16%. So the investor should be paid 16. Obviously, investor should be paid 16% of his investment, because it is his personal ability to invest 16% to earn at the rate of 16. So investor should be earning this, 16 rupee, right? So investor should be getting 16 rupee. And what is the expenditure that we are going to pay?
1.5.
Expenditure is 1.5. So can you tell me what should be the return that the mutual fund should be generating in terms of money I'm talking of? What should the amount of return that the investor should be, and I mean the portfolio should be generating? Yeah. How much money should the portfolio generate? In fact, the expenditure, they're saying 1.5%. It's not going to be 1.5% of 100 rupee. Whatever you have invested, it's obviously going to be that percentage, 1.5% of that, right? So 1.5% of 94.5. So how much is the expenditure that the mutual fund is having? 94.5 into 1.5%, which is
1.4175.
1.4175. Yes, 1.4175. So now the obligation on the mutual fund is that to earn this 16 rupees and also to earn this 1.4175. So how much should the mutual fund earn in total? Can I say this 16 as well as this 1.4175? So what's the total?
17.4175.
17.4175, right? So if I ask you rate of return to be earned by mutual fund have to earn 17.4175, because out of the 17.4175, you're going to pay 16 to the investor and you're going to pay 1.4175 for its own expenditure. So this has to be earned on an amount of 94.5. So 17.4175 divided by 94.5, which is 18.43%, guys. So it is simple. Portfolio should be giving a rate of return of 18.43%. So 94.5, the portfolio amount of 94.5 should generate a return of 18.43%. 43%, which will translate to 17.4175, out of which 16 will be paid to the investor and 1.4175 will be paid out as an expenditure. Is this logic clear, guys?
Yes.
Yeah?
Clear. Yes.
Perfectly clear?
Yes.
Yeah. Okay. So now, let me just try to give you another example in a similar type, and you just try to solve and give me the rate of return. Okay. Second example. Personal earning of Mr. X is 21%. Okay. And I say initial expense of mutual fund is 2.5%, and recurring expense of mutual fund is going to be 2%. So from this, calculate the rate of return on fund. Rate of return that portfolio should generate, or rate of return that mutual fund should generate. Can you calculate this?
Yes.
Yeah, just give it a try, guys.
The 23.53%.
23.53%.
53%.
Are you all getting this? Everyone?
%23.54%.
23.54%.
Yes.
23.5354%. Okay. Well, I can actually put this in the form of a formula also. The rate of return to be earned by mutual fund is going to be 1 upon 1 minus initial expense, 1 upon 1 minus initial expense, into personal return of the investor plus percentage of recurring expenditure. So 1 upon 1 minus point initial expenditure is what? 2.5%, 0.025 into return of portfolio, which is 0.21, right? And then plus 0.02. So just check, it is 0.21 divided by 0.975 plus 0.02. 23.54%. Are you getting this easily, everyone? Is the formula clear? So it is like simple.
Yes.
You're supposed to earn this 21 rupees on this 100 minus this amount, 100 minus 2.5, or 1 minus 0.025 you can take. Plus also you need to earn this percent return. Right? So I've given the logic with this diagram and also with this formula. I hope it is clear, everyone.
Yes, clear.
Yeah, okay. Now, let's look at this question number 2 now. The unit price of equity linked savings scheme of a mutual fund is 10. So each unit is priced at rupees 10. Public offer price of the unit is 10.204 and the redemption price is 9.8. Calculate the front end load and back end load. So the unit price of equity linked savings scheme is 10 rupee. Public offer price is 10.204, redemption is 9.8. Then what is the front end and back end load? Now what is this public offer price and what is this redemption price? Let's understand this simply. We have a mutual fund. So there are two sides to this mutual fund. One is a buy side and another is a sell side. Okay. Now, on one side, you may have an investor, and on the other side, you may have a divestor. Now, what would an investor be doing? Investor is going to get unit from the mutual fund, right? And investor is going to pay to the mutual fund 10.204. Investor is going to get how much? 10.204. On the other side, you have a divestor. So divestor is someone who is going to return the unit to the mutual fund. And it wants the redemption or cash value of it, which they have stated to be 9.80. So investor is someone who is in need of the units, who wants to buy units. The divestor is someone who is going to sell the units to the mutual fund. Is this structure clear, everyone?
Yes, sir.
Yeah.
Yes.
So this 10.204 is what we call it as public offer price. And this 9.8 is the redemption price or the redemption value. Now the question asks us, what is the front end load and what is the back end load? Okay. So front end load is pretty simple. Public offer price. I mean, whatever we are going to charge to the public at large, that is going to be obviously more than the worth of the mutual fund. The mutual fund is having units with a NAV of 10 rupees. So when the investor is going to buy, 10 rupee unit at a price of 10.204. And the same 10 rupee unit will be redeemed from the divestor at a rate of 9.8. Okay. So you want to know what is the front end load and back end load. Okay. Now, front end load. Front end load. It is simply, you can say 10.204 minus 10. So can I say the investor is paying 0.204, right? Additional over the NAV value. Right, guys? Because the unit value is 10. The unit value is 10, but the mutual fund is going to pay 10.204 for that. The unit value is 10, but the mutual fund is going to pay 10.204. So he's paying this 0.204 additional, right? So what is the front end load percentage? Front end load percentage. Front end load percentage will be guys 0.204 on your investment of 10.204. So it's like out of 10.204, 0.204 is something which you're paying for investing as a charges for investing into the mutual fund. So this amounts to
1.99.
1.9999%. So let's keep it as 1.99%. Now, what is a back end load or exit load? When you're divesting from the mutual fund, when you're removing your money from the mutual fund, what is the back end load that we have? Back end load is what? The unit which is worth 10, that is being redeemed for 9.8, so which is 0.2. The back end load is 0.2, right? So now if you
Right.
talk about what is the percentage, back end load percentage. Back end load percentage will be 0.2 on 9.8. It's like you're receiving 9.8, right? On the out of that 9.8, you're paying out 0.2. So 0.2 upon 9.8 is how much?
2.04%.
0.2. 2.04%. Right? So we can say front end load, formula wise, it is front end load upon public offer price. And this is going to be back end load upon redemption value. Clear, guys?
Yes, clear.
Yeah. Okay. Perfect. Just try out this question 3, guys. It's a very simple question. Let's see if you can get it done.
Is it 0.3375?
Now, see, what we need is NAV in time period 1. The end of the time period, the end of the month, what is the NAV? 20.06. What is NAV at time period 0? 20,
Yes.
right? And apart from that, the distributions which we have, that is 0.0375 plus 0.03, which is 0.06 0.00675. Right, so total distribution that an investor has received is 0.0675. So what is the monthly return? It's quite obvious. Monthly return is 20.06 minus 20, because it's the capital gain which we have. Right, 20.06 minus 20 is the capital gain. Plus you also have 0.0675. You also have this 0.0675 as the distributions. So on your initial investment of 20. So what's the rate of return?
0.3375.
0.03375. 20.06 minus 20, 0.06 plus 0.0675 divided by 20. Right, and you can obviously multiply it by 100 to give it a percentage. Look, 0.6375%.
Sir, 0.6375.
0.6375%. Easy. Now, question 4. Yep. Try to solve this, guys. Try to solve this.
Two 2.44%, sir.
How much?
2.44%.
2.44%. Okay, well, an investor purchased 300 units of a mutual fund at 12.25 per
3%.
unit. So this is the NAV as on the initial day, as on 31st December 2009, and then as on 31st December 2010, which is one full year, it has received dividend distribution of 1.25, capital gain distribution of 1. We are required to calculate the return on investment if NAV as on 31st December is 13. Okay, so here we have
Sir, 24.49.
NAV at time period 0 is 12.25. Distributions is 1.25 plus 1, which is 2.25. And then NAV at time period 1 is 13. So NAV at time period 0 is 12.25. Dividend is 2.25 and NAV is 13. So now for the first part, return on investment if NAV is 13. So return on investment is going to be 13 minus 12.25 plus the dividend distribution of 2.25 upon 12.25. So 13 minus 12.25 plus 2.25 divided by 12.25. This is 24.49%, the first part. Clear? Am I right, guys?
Yes, yes.
Yeah. Now the second part, the return on investment as on 31st December 2010, if all dividends and capital gain distributions are reinvested into additional units. So instead of you getting cash, you are being paid in the form of additional units. Okay. So return on investment if all dividends and capital gain distribution are reinvested into additional units at 12.5 per unit. Okay. So what is the total distributions?
300 into 3.
Total distributions will be 300 units into 2.25 per unit. How much is this? 675 rupees. So 675 rupees is the total amount of distributions, right? Now, total amount of distribution being 675, and they're saying that you are given additional unit at a price of 12.5 per unit. So at a price of 12.5 per unit, you are being paid additional units. So additional units allotted or additional units received by investor. Additional units
54.
received by investor. Can I say it will be 675 upon 12.5? How much is this? 675 divided by 12.5?
54.
54 units. So what is the closing number of units?
354.
Closing number of units will be 354. Okay, so value of investment at start of year.
3,675.
Value of investment start of year, it is 300 into 12.25. into 12.25, which is 3675, right?
Yes, sir.
3675. Then, what is the value of investment at end of year?
4,602.
Value of investment at the end of the year. 354 into
13.
13.
13.
What's the value of investment?
4,602.
4062.
4602.
4602.
Okay, 4602. Right. So what will be the rate of return now?
25.22.
Rate of return will be 4602 minus 3675 upon 3675. How much is this?
17.06%.
Sorry?
17.06%.
17 point.
Sir, 25.22.
Yes, 25.22.
3675. Yeah, 25.22%. Easy? Everyone?
Yes.
Yeah. Okay. So now try out this question 5, guys. Similar to question 4. So give it a try. Question 5. Give it a try.
At 26.47% on the
Mhm.
first.
Answer for both. Answer both the things, guys. The first one is how much?
26.47%.
26.47.
Okay, that's true. Try the second one.
Sir, it's 27.24%. 27.24.
27.24. Perfect.
Yes, sir.
Yes. Just check for these guys. Are we getting this number, everyone? 26.47 and 27.24%. True. This should be the numbers. Are you all getting this? Answers? Yeah, everyone? Is everyone getting this number? Okay. Then let's go for question 6 now, guys. So here we have the asset value at the beginning of the month is 65.78. Annualized return is given as 15%. Distributions which are made in the nature of income and capital gain, that's 0.5 and 0.32. we have to give the calculation of month-end NAV of mutual fund. Month-end NAV of mutual fund. So can you solve this? Or shall I take it up? Yeah?
Yeah, please take it up, sir.
I'll take it up. Okay. So this is question number 6, guys. We have NAV at time period 0. So NAV at time period 0 is 65.78. And we have the distributions, which is 0.5 plus 0.32, which is 0.82. So NAV in time period 0 is 65.78, and the amount of dividend distributions is 0.82. Okay. Now, annual rate of return is given to us. Annual rate of return is 15%. Can you tell me what will be the monthly rate of return? If your annual return is 15%, what will be the monthly rate of return?
1.25%.
15% divided by 12, which is 1.25%. Now, how do we calculate the rate of return? This is NAV1 minus NAV0 plus distribution upon NAV. So rate of return is, or you can just multiply it by 100 also. So 1.25 is equal to, we don't know the closing NAV, but we know the opening NAV as 65.78 plus 0.82 upon 65.78 into 100. Can you solve this equation and give me the month-end NAV? Can you calculate the NAV, guys?
147.185.
Sorry, what?
147.185.
Mm-hmm. What is the NAV, guys?
147.185.
All right. Yeah. Are we getting it or no? Well, let me solve it. It's very simple. 1.25 divided by 100 into 65.78 is equal to NAV1 minus 65.78 plus 0.82. So it's 1.25 divided by 100 into 65.78, which is 0.8225 is equal to NAV in time period 1. This will be like 0.82 minus 65.78, which is minus 64.96. So what is NAV in time period 1? 64.96 plus 0.8225, which is 65.78. So what can you say about the NAV? Any special comment about the NAV?
It has remained the same.
There's no change, right?
Yes.
There's no change in the NAV, right? Yes or
Right.
no, guys?
Right.
Correct?
Yes, sir.
There's no change in the NAV. Okay, that's question 6. Very easy. Now, question number 7, guys. You should be able to get this easily. Question 7. You have to compute the NAV. We have done this similar type of question in our concept discussion. So just give it a try. Question 7, easy, guys.
$207.856.
NAV.
Yes, sir.
No. Seems to be incorrect. Can anyone else just check?
So, sir, it's 41.57.
41.57.
57.
Okay.
Yes, sir. 41.57.
41.57. Okay. So what we do is we just simply multiply them, right? Take a total, and to that we are going to subtract. Going to subtract the outstanding expenses and liabilities, and then divide it by 10 lakhs. So we all
Yes.
get 41.75.
Yes. 41.57.
41.57. Okay, yeah. This should be your NAV. Right, guys? Are we good, everyone?
Yes.
Yes, sir.
Okay, let's look at this. Question 8. So we have the 4 companies of investment, number of shares held, market price on 1st Feb and market price on 2nd Feb. Total number of units which are outstanding is 6 lakh. Okay. Calculate the net asset value of the fund. Following information is given. Right. So calculate the net asset value and the following information is given. So we are going to assume one Mr. A submits a check of 30 lakh to mutual fund, and the fund manager of this company purchases 8,000 shares of M Limited, and the balance amount is held in bank. In such case, what will be the position of the fund? Find the new NAV as on 2nd February. So we can definitely get the NAV of the fund on 1st February. Then when we go for the 2nd February, right? So 2nd February, we have the new prices. But before 2nd February kicks in, there is new investor who pays a check off, who's paying an amount of 30 lakhs. And against that, we are going to we are going to buy 8,000 shares, and the units will be allotted to him based on the 1st February NAV. So first we need to get the February NAV as on 1st February. So calculate the NAV as on 1st February, guys. Calculate the NAV as on 1st February. Calculate the NAV as on 1st February, guys.
78.84.
Perfect. So we have the NAV as on 1st February. This is question number 8. Yeah.
78.84, sir. Right.
NAV on 1st February 78.84.
84.
Okay. So can you tell me what will be the number of units to be allotted to A? Number of units to be allotted to A? Yeah.
Yeah, 38,051.75.
38,000.
51.75. 38,051.75.
If the investment is 30 lakhs, so 30 lakhs divided by 78.84, it's coming 38,051.75 units.
Okay, so we can calculate this as what? 30 lakh upon 78.84. So units can be in decimal, guys. So 38, how much is this? 3 lakh?
38,051.75.
Okay, 38,000.
51.75.
51.75. You can have the units in decimal. So 38,051.75 is the number of units to be allotted. And what will be the cash balance after share purchase, cash balance after share purchase.
Not remembering that. Need to
Mhm.
look at the.
Sorry.
Need to check the question, sir. Not remembering.
What is the number of shares that we got?
So cash would be 1,20,000.
Because 8,000 shares of M. 8,000 shares of M. And M is priced at what? 312.4. So we got 30 lakhs, out of which we spent on investing 8,000 into 312.4. How much is this?
So 1,20,000.
Into 312.4 minus 30 lakhs, which is, cash balance left is what? 5,800,000. Correct, guys?
Yes, sir. 5,800.
If you have the cash balance as 5,800,000, now you can obviously calculate the NAV by taking the prices of L, M, N, P, and then cash, take a total, and then calculate the NAV.
So 48.28.
How much?
48.28.
48.28. No.
I think so. Yes.
Sir, could you please explain on the point number 2, what we have to do, sir? Now, the existing fund we have that each number of shares we have.
Mm-hmm.
Sir, A is giving the check to the mutual fund
Correct.
company, right? And 8,000 shares he
Who
purchased
purchased?
now.
The mutual fund company.
A.
A didn't purchase. The fund manager purchased. The fund manager, which means the mutual fund which is holding these 4 shares, it purchased additional shares of
Okay.
M.
Which means that now that M shares will increase to 38,000.
Yeah. M shares will increase to 38,000. Perfect.
So,
Additionally, the cash also will get by 5,800,000.
Cash balance also will be there. Yes.
78.84.
Okay, fine.
78.84.
So this is going to be like L is 20,000 shares at a price of 20. Okay. M is going to be
38,000.
Yeah, M is going to be
38,000.
38,000 into
312.4.
312.4, 20,000 into
361.2.
361.2,
60,000 into
60,000 into
505.1.
505.1. Okay, 20,000 into 20, 38,000 into 312. And so we have this all numbers. Now, what will be the value of cash?
5,800,000.
Yes, 5,800,000. So give me the total value of this.
Yeah, 5030 2000. 5030 2000.
2
000.
000.
Yeah, divided by
Sir, I'm
5020. No.
sir, I'm getting NAV 83.73, 82.73.
Oh, my bad. These numbers won't be there, guys. Because these are 1st February prices, huh? So I need to have the 2nd February price because we want NAV as on 2nd February. So this is a 20.5, 360, 383.1, and 503.9. Yeah, take the total now. And the new, this will obviously be coming as a numerator. Denominator is going to be, number of units, which was earlier how much? 6 lakhs.
Lakhs now. Yeah, now 8,000. 6 lakhs 8,000.
Why 8,000? It will be 6 lakh 38,000 and 51.
51.75.
yes, 6,38,000.
Because these are the number of units that we have issued, right? We have bought 8,000 shares of M Limited. But the number of units will be increasing by 38,000 and 51.
Yeah, right, sir. Right, sir. Got it.
Yeah, take the total and divide it and get the NAV value is.
$82.26.
What's the total?
Total is 5 crore 24,86,800.
So 5 crore 24,86,800 will lead to 82.26.
26.
Yes. Got it, everyone?
Yes, sir.
82.26, everyone. Okay. Easy. Okay, as the following asset. Yeah. Now a similar question. Question number 9. Just check. Can you solve it, guys? Similar to similar to what the other question that we did just now. Can you solve this?
Yes.
Yeah. Sure. Give it a try, guys. Quit.
NAV is 119.0475.
Which one? The first NAV.
First one,
First NAV is how much?
119.0475.
119.0475.
0475.
Okay. What is the number of units issued? It's going to be 50 lakhs divided by 119.0475. How much is the number of units issued? $50 lakh divided by 119.0475.
Okay, 42,000.04.
40.
42,000.04.
Now, second.
So 4,20,000 units will be
42,000. So exact 42,000 you can take.
42.
Okay. Number of units issued is this much.
Yeah, new NAV would be 119.048.
The new NAV?
Yeah, 119.048.
119.048. Perfect, guys. Right? Are we getting this number?
Yes, sir.
Yes. So it is similar to the previous question that we had, which is 119.048. Okay, so let's take up the next question, question number 10.
There is part C also.
Okay, now suppose at 2 p.m. the market price of the share is as follows. So you have given this NAV using these prices, right? I was asking for part C answer.
No, sir, I'm not using that.
Okay, so you'll have to answer. So this is the NAV as on for part B.
Yes.
Okay,
Yes, sir.
then give an answer for part C also. Yes. So part C, the number of shares, the new number of shares needs to be accounted for, and the new prices along with the revised cash position.
The 122.075.
122.075.
Yes.
Let's confirm, guys. Are you getting this? Okay. Then let's go for question 10, guys. A has invested in 3 mutual fund schemes as per the details below. Mutual fund A, B, and C. So we have the date of investment. Amount of investment is 50,000, 1 lakh, and 50,000. Net asset value at the entry date is 10.5, 10, and 10. Dividend received up to 31st March. It's 950, 1500, and nil. NAV is given for all of them. What is the effective yield on per annum basis in respect of each of the 3 schemes? Does it seem simple to you? Or is it challenging?
Yeah, it's okay.
So
Go ahead.
only the thing is the date of investment is 1st December, which means 30th March. Then it is a four month is there.
Correct. So whatever return you'll get that for 4 months.
4 months. Then we have to multiply for remaining one year. We need to convert it.
You need to annualize it.
Analyze it.
Annualize it, yes.
And for the second case for 3 months, third case for 1 month.
Correct. Perfect. So would you
Sir,
like to try it? I'll just do one thing. I'll give you the format. Okay, and you just try to fit into it. Okay, so here we have this. So now, for all the mutual funds, we have the NAV at the entry date, we have the amount of investment. So first, when dividend received is given to us 950, right? And NAV as on the closing date is also given. So we need to first have the idea of number of units, right? So you calculate the number of units. Number of units will be investment upon
Initial NAV.
initial investment, right? That's the number of units. Then based on that number of units, we can get the value of investment on 31st March 2010, value of investment as on that date, which will be, of course, NAV into units. Okay, so that's the value of investment. Dividend received is already known to us, which is dividend given to us. We can calculate the rate of return. Return will be, this amount of investment, let's keep it as V0. Value of investment on this date, this is going to be V1, and distribution is already what we are aware of as D. So return will be V1 minus V0 plus D upon V0. Then we need to calculate the number of months also. In the first case, the number of months is 4, and then it is 3, and then here it is 1, and then we calculate the annualized yield. Okay, annualized yield. Can we solve this table now? Can you solve this table, guys? So it's just like a full-fledged combination of this, right? So annualized yield will be, simply return divided by months into 12. Just calculate this, guys, quickly. First up, the number of units will be amount of investment divided by NAV. 4761.9. Then it is 10,000. Then it is 5,000. So now the value of investment as on the ending date will be NAV as on ending date into the number of units. Right. So that should be 49,524. Then 1,01,000. And then this is 49,000. Now, what about the rate of return? Did we calculate the rate of return, guys?
Yes, sir. On the first case, 2.84% annualized.
No, month return for the time period which is investment is made. So 49,524 minus 50,000 plus 950 divided by
That is
50,000. 0.95%.
0.95%.
Into 12 divided by 4, that is coming, it's 2.84. I'm saying that.
2.84. Okay. Similarly, go ahead with the third and the second and the third case.
So second comes to 10%, third comes to 24%.
Second comes to 12%.
No, second comes to 10%.
10%, okay.
Third 24.
Third comes to minus 24%.
Minus 24%.
Perfect. Third one is minus 24%, correct. Easy, everyone?
Here the trick is that we need to find out what is the initial units.
Yes,
Then,
unless and until you don't get the initial units, you can't get any other number.
Yes, sir. And the month also. We need to
number
analyze.
of months is obviously, for annualization, you need the number of months. That is absolutely true. Okay, now, this is not done. This is also not done. Try out question 11, guys. Similar to the question 10C. Date of investment is given. Amount of investment is given. Net asset value is the entry date. Dividend that has been received is given. In fact, no, don't do it. It's just similar to previous one. Just, try question 12 now. Can you see what's the difference in question 12 as compared to the previous one? Let's look at question 12. And
it is in number of days.
Number of days. Okay, we want to calculate the number of days, but you know what? We have to calculate the number of days of investment, but do we have like...
We have also calculated yield.
We have to calculate only from the given information, we can calculate the yield for that particular number of days, and we have been given the annualized yield. So we have to balance both of them and get the number of days. So first do it normally, get the regular return, regular yield or the rate of return which we had, right? And then we'll discuss about this days rather. Okay. Yeah. So just try to solve this like a normal thing. Calculate the effective yield, just the return. Just calculate the return. Annualization part we'll do it later. Can we calculate just the normal return like the previous question? Yes or no? Can we calculate the rate of return like V1 minus V0 plus D upon V0? We can do that, right?
Yes.
Yeah? Okay, go ahead, guys. Hmm. Did we get the number of units in each of the schemes?
Yes.
Yeah. Okay. Just wait. I'll just take this over there. So over here we have so what is the number of units for mutual fund X?
19,417.48.
48 for mutual fund Y.
39,603.96.
39,603.96. Then
20,000.
20,000 is the number of units. So we can have the value at the end of the month or end of the year, which is as on 31st March 2018. So NAV is what? 10.25 into 19.4174 0.48. How much is this? 1,99,029.
0.17. Yeah, 29.17.
Okay. Mutual fund Y.
Third,
This will be units into NAV1. Yeah.
3,96,039.6.
6,039. Or let me make it as 40. Okay. Then
2,04,000.
2,04,000. Okay. We have the dividend amount. We can get the return number.
Yeah. X comes to 2.5%.
2.51%.
5.
Just 2.5. Okay. Second case.
2.51%, sir.
2.51. Okay. Second case.
Minus 1%, almost -1.
Minus 1%.
Yes.
0.99%, sir.
Minus 0.99%. Okay. Then mutual fund Z.
4.5%.
4.5% positive, no?
Yes, sir.
Positive.
Yeah. And we
Only
have the
middle is negative, minus 0.99.
yeah, minus 0.99 for Y. Annualized return is given to us, which is 9.66%, minus 11.66%, and 24.15%. So we have to get the days of investment. So how do I get the days of investment? How do we get the days of investment, guys? Days of investment. How do we get it? It is simple. Your return which you have computed upon annualized into 365. Return upon annualized deal or annualized return up into 365. So just calculate and give me the days of investment. Give me the days of investment, guys. Return upon annualized number into 365.
The first one comes to 94.46. That is
First one
95
comes
days.
to 95 days. We'll take it as 95.
Yeah. Second one 31.
Second one 31. Third
68.
68. Okay. Now the question has not asked, but I'll just take it ahead one step. I would like to know what is the date of investment. Because see, we are calculating the return as on 31st March 2018. I want to know the date on which each of these investments were made.
Sir, we have to go back from 31st March
Yes.
2018.
95 days, 31 days back.
Yeah.
Just go back by that many number of days and give me the date of investment.
So we have to do it from 31st March 2018 backwards. Okay. The first one comes to 25th December.
First one comes to 20.
26, sir. 5 days. 26.
Okay.
26, yes.
26th December. 26th December 2017, right?
2017.
Yeah.
Yes, sir. 2017.
28th February.
Then the next one,
Yeah, 28th
28th
February.
February.
28th February. So 28th February 2018. Then what about the third case?
Yeah, 22nd January.
22nd.
How much? 20?
22nd.
22.
22nd January.
January.
Yes.
Got it? 22nd Jan 2018. Clear, everyone?
Yes.
Okay, so I've done got a combination of these sort of questions. The date, the return, and everything is done. Now, let's just take a break right now, guys. And after the break, we'll continue with one more question. And then at the end, we'll also take up some MCQs. Okay, let's take a break, guys.
Right, sir.
Shall we begin? Are we there, everyone?
Yes, sir.
Yes.
Okay. Fine. Question number, 1 second, I'm just checking for it. Question number 16, guys. On 1/4/2012, mutual fund issued 20 lakh units at rupees 10 per unit. Relevant initial expenses involved 12 lakh. It invested the funds so raised in capital market instrument and built a portfolio of 185 lakhs. Okay. So what's the total money collected? Total money collected, guys?
200 lakhs, 2 crore.
200 lakhs, right? And out of that, out of that 200 lakhs, we can see we have built a portfolio of 185. 12 lakh is set as an initial expense. So 185 plus 12, that matches to 198. And we have raised 200. Sorry, 185 plus 12, which is 197 and 200. So where is the difference? 3 lakh going?
They are in loss.
And loss. Will it be loss?
Initial recurring expenses.
Recurring expenses. Oh. You guys are using too much of your brain. You know what? You're using too much of your brain. This is question number 16, guys, right? 16 then? What is this question? Yeah, 16. Funds raised is 20 lakhs into 10, which is 200 lakhs. So funds raised is 200 lakhs. Initial expense is 12 lakh. So we'll say less initial expense of 12 lakh less portfolio has been built, which is 185 lakhs. So balance 3 lakh. What do you think? What is it going to be?
Exit load.
No exit load, nothing. This is the cash balance, guys. So you raised 200 lakhs, 12 lakh you spent for initial expense. You have a portfolio of securities for 185 lakh. So of course, the balance 3 lakh which you have, what is that going to be? The balance 3 lakh is going to be the cash balance.
Right.
Right, guys. Right. So you guys were using too much of your brains. Okay. Anyways, so during the month of April 2012, it disposed of some of the instruments costing 60 lakhs for 63 lakhs and used the proceeds in purchasing securities for 56 lakh. So during the month of April 2012, it disposed of some of the instruments costing 60 lakhs for 63 lakhs So certain securities which the fund has purchased for 60 lakh, it sold it for 63 lakhs. And it used the proceeds in purchasing securities for 56 lakh. So you purchased new securities worth 56 lakh. Fund management expenses for the month was 8 lakh, out of which 10% was in arrears. In April 2012, the fund earned dividends amounting to 2 lakh and it distributed 80% of the realized earnings. So whatever amount of dividend you have earned, you distributed 80% of that. On 30th of April, the market value of portfolio was 198 lakhs. Okay. So now what we are interested in knowing is, I want you to calculate, like we have the opening cash balance here. Opening cash balance is 3 lakh. Correct, guys?
Yes, sir. Relax.
Now, in this cash balance of 3 lakh, there's a lot of transactions which has happened. There's a lot of transactions which has happened in the question. So I need to give effect of that transactions, additions and subtractions, and then come at the closing cash balance. Right? Because I need to first have that, opening and closing, closing cash balance. Then only we can think about calculating the NAV and all such things. Right? So from this, from the information given in the question, they say that you have disposed some of the instrument costing 60 lakhs for 63 lakhs. So when you're selling the instrument, is it going to be a cash inflow or is it going to be a cash outflow?
Inflow.
Right? So it's going to be sale of securities. Sale of security. How much is it?
63 lakhs.
63
lakhs.
3 lakhs. Okay. And did we purchase any security against this?
Outflow 56 lakh.
Purchase of securities. Purchase of securities is how much?
56 lakhs.
56 lakhs. Okay. Any other cash inflow or outflow happening during the year?
Cash fund management expenses of 8 lakhs, of which 10% was in arrears.
Mm-hmm.
So
fund management
8 minus 7.2 lakhs.
Mm-hmm.
7.2 lakhs will be outflow.
7.2
lakhs.
2
7
lakhs.
lakh 20,000.
One second, guys. How much? So we have like the fund management expenses is 8 lakhs, out of which 10% is in arrears. So what have we paid?
7 lakh 20,000.
Expenses paid is 7 lakh 20,000. Any other cash inflow is there? Or any other outflow?
Dividend earned is 2 lakhs.
Yes, we have earned a dividend of 2 lakhs. So dividend received is 2 lakhs. Right? Any other cash outflow is also there?
It distributed 80% of its realized earnings.
Sorry?
80% of realized earnings are distributed.
80% realized earnings is paid out as distributions, right? So I need to subtract the distributions. So What are the distributions going to be?
80% of realized earnings.
80%?
Of realized earnings.
So,
earnings is
tell me.
1,60,000, sir.
No,
dividend.
no.
Sir, we have also 63.
Capital gain is also there, right?
3 lakhs.
Sir.
Distributions is 80% of realized earnings. Right. So when you say it is realized earnings, it is going to be 80% of dividend plus
Capital gain.
capital gain. So this is going to be 80% of how much is the dividend?
2 lakhs.
2 lakh.
Capital gain is 3 lakhs.
Plus capital gain is 3 lakh.
3 lakhs.
Yeah. So total is
4
4
lakhs.
lakh.
4 lakh.
So distributions are 4 lakh. Then you take the closing cash balance. So what is the cash balance left out?
$80,000.
80,000.
Yes.
Cash balance is 80,000 left out.
80,000.
Okay. Cash balance is 80,000. Now, after that, we can now go ahead with the calculation of NAV. Calculation of NAV. Portfolio value. What is the portfolio value given in the question? 198 lakhs.
198 lakhs.
Right. Then one second, please. Some few. Portfolio value is 198 lakhs. So cash balance is 0.8 lakhs. Right. And then any other income which is receivable? Any other income which is receivable, guys? No, everything has been received, right? So cash is 0.8 and then less outstanding expense. Outstanding expense will be 0.8 lakhs.
Yes.
Right. So this is 198 lakhs. And then when we talk of NAV, is going to be 198 divided by what's the number of units? 20 lakh units, right? So 19.8 divided by 20, which is 9.9. Got it, everyone?
Yes.
Sir, how come that outstanding expense is 0.8 lakhs?
7.2 lakh is paid, right? Out of 8 lakh. 8 lakh is the expense, right?
Okay.
10% is in arrears.
And 10% as in arrears, huh?
Okay, including arrears, they paid it.
Including arrears, how will you pay? Total 8 lakh is the expense, out of which 10% is in arrears. So 10% means 0.8 is in arrears. So 7.2 has been paid already.
Okay, which means the total expenses is 8 lakhs.
8 lakhs, yes.
That's what I mean.
Yeah. Total expense 8 lakh, out of which 7.2 has been paid. Okay.
Okay, sir.
Yeah.
So now we have to calculate in this for Mr. Akash
Now,
about
for
100
Mr.
units.
Akash, who has subscribed to 100 units and is disposing of the same at a closing NAV, what was his annual rate of earnings?
Yeah,
So he has
10.
subscribed to 100 units, right? So value of investment in time t equal to 0, that is 100 into 10. So he might have made an investment of 1000.
Yes.
And what is the value of his investment now at the end?
100 into 9.9.
Value of investment
And
in time t equal to 1. So is this a monthly data or is this what?
It's a monthly data, sir. You see, he invested on 1st April.
for the month. And he has earned a dividend also.
Yeah. What was the number that we get? I mean, the value of investment in time equal to 1.
990.
990. Perfect. So it is 990. Value of investment in time equal to 1. It is 990. But it is 1 month, right? And we would have
Yes.
also received dividend, right?
Yes.
So what is the dividend that we would have received?
It comes to 8
Total
rupees.
dividend that the fund has given is 2 lakh.
2 lakhs for
Right? So 2
20
lakh
lakh
for how
units.
many units?
20 lakh units.
20 lakh units. So every unit it is 0.1.
Yes. For 100 it comes to 8.
For 100 it comes to
8 rupees.
8 rupees.
Yeah,
2 lakhs divided by 20 lakhs is coming 0.1.
0.1 into 100.
It is 100. It will come 10 rupees.
10 rupees.
Yeah. It comes out to be 10 rupees. Now, since it is 10 rupee, what is the value of investment at the end? 990 plus
Nine-
the income of 10.
Distribution is only 80%.
Huh?
Distribution is only 80%.
Distribution is what, 80%? Oh, sorry, yeah. Dividend received is 80%. 80% of the
That
money.
comes to 8 rupees.
The total distributions is 4 lakh, guys.
जगवंदर सर
हाँ
सर वो आपके जो टैब है ना उसकी वो विजुअल नहीं हो रहा है शायद उसका वो बंद हो गया शेयर
नहीं वो कोहोस्ट से निकाल गया अपने जो कोहोस्ट बनाई है उसको
ओके 1 सेकंड सर
हाँ इसलिए मैं बोल रहा था बीच में co-host बनाई तो मैं स्क्रीन शेयर करता हूँ.
Sir, dividend distribution is 4 lakhs, sir.
हाँ, so 4 lakh divided by
20 lakhs.
20 lakhs. Yes,
It comes to 8 rupees.
it comes to
20 rupees.
20 rupees.
8 rupees.
I need to say the 4 lakh divided by 20 is
Into 100.
and into 100. I mean to for 100 shares I'm talking about 20 rupees.
Okay, so 990 plus 20 minus 1000.
Yeah, 20 minus 100, 10 is 10 divided by 100. It will come the 1 percentage. In multiplying by 12, it's 12 percentage.
So it is 0.2 into 100, right? 20, and opening was it is 1000. So 10 upon, so this is 1%,
Yes, sir.
and annualized yield will be 12%. Correct, guys?
Yes, sir. Here the trick is that we should not forget about the dividend.
Yes. Okay, fine. So annual rate of earning 12% is done. Now let's go for certain MCQ questions, guys. Okay, can we see the MCQ questions?
Yes.
Can you see the question? Okay. What's the answer to the first question?
$12.25.
12.25.
Yes.
Yes. So it will be like 50 lakh plus 1 lakh minus 2 lakh divided by 4 lakh. Perfect. Okay. Try out question 2. Investor bought 5,000 units at an NAV of 15. The fund declared 2 per unit and closing NAV is 16. So of course the rate of return will be simply 16 minus 15 plus 2
Yes, sir.
by 15. It is 20%.
20%, sir.
Yes. Okay. Question number 3, guys. I think it's quite easy.
20.
It's what? 30 is the closing NAV minus 25 is the opening NAV. And then you divide it by, the dividend received is
28%.
divided by 20. So 28% is the answer.
Yes.
Okay.
28%.
Fourth question. A mutual fund has an investment of 80 lakh, receivable 2 lakh, accrued expense 1 lakh, other liability 3 lakh, and it has issued 7 lakh 50. What's the NAV? What's the NAV, guys? You think?
104.
104? 104, yeah. Everyone getting 104? Okay. Then, fifth one. Sorry, I think screen has just stopped sharing. Okay. So investor purchase units of mutual fund at NAV 20. Entry load is 2%. Exit load is 1%. After 1 year, the NAV rises to 25. Right. So when the NAV is 20, now of course this is entry load is 2 and exit load is 1%. So one thing we need to take is this is percentage of NAV. So if we need to look at if the NAV numbers are given, we are obviously commonly looking at NAV is taken as a base for percentage. So if your entry load is, let's say, 2%, so what is the amount of purchase price?
19.6.
24.75. Sorry, 19.6.
Purchase price.
19.6.
How are you going to subtract?
20.4.
Entry load is something that you're going to pay in addition, right?
20.4, sir.
So on this, it is 20.4.
Yes, sir.
What is the redemption value?
24.75, sir.
Now it is 25 into 0.98 you will do. Sorry,
Yes, sir. 24.75.
0.99. So 25 into 0.99, 24.75 is what we are getting. So the rate of return is simply going to be 24.75 minus 20.4 divided by 20.4.
21.32 percentage.
21.32. That's
2%.
Yeah, this should be the close is this number. You can say 21.32%. Yeah. Okay.
Yeah, I was thinking all the 4 questions are correctly answered is given.
How come one was not there, right? Okay.
So actually, see, by giving like this, you are really tested our knowledge, sir. Not you are intentionally giving to check our knowledge.
Okay. Anyways, so we have in today's session, we have seen most of the time numerical questions wherein the NAV calculation is involved, the rate of return is involved, then the time period for which the investment is made, and then we have also seen how we go about the analyzing the things. Also, when it's a reinvestment scheme, dividend reinvestment scheme, then how do we calculate the rate of return? In that case, by recomputing the number of units. So we have, quite a more challenging questions upcoming for the upcoming, Wednesday session, wherein whatever questions we have done, those are very rudimentary or very basic level things, right? So certain challenging parts are yet on our way. And also we'll be discussing something about the, the types of mutual fund and all. So we will be definitely taking that up in the upcoming session. Yes, Aminathan, any query?
Sir, here the thing is that entry load we need to add to that NAV.
Yes, because you need to pay extra, right? Because entry load is something you pay. Entry load is something that you pay for. You can treat it like a brokerage, right? So the price at which you buy a share, you pay brokerage on that. Right?
Okay,
so your cost of the unit needs to be obviously adjusted. So if the unit is having an NAV of 10, you are going to pay more than that to get the unit.
Yes, sir. If the expenses is incurred, then we will reduce it from there.
At the time of redemption, you will reduce it. Yes. When you're having the redemption, then you won't get the exit load. Rather, you have to pay the exit load. So redemption proceeds will be received and paid. So therefore, you're going to subtract it.
Right, sir.
Okay. Any other queries, guys, for the day?
what I did it said I actually initially I reduced
You reduced, you
the
subtracted it, but how can you subtract entry load?
Mm.
You need to pay more for acquiring an asset, right? Because you need to pay the transaction expense also.
Yeah, that time I
What is
got
your
it.
transaction expense?
Yes, sir. Now I understood. It's clear now.
Okay.
Okay, thank you, Jagbandhu sir, and thank you, student, for making the session very interactive. Now, since I was watching this last MCQ, and Samanathan was asking, sir, in a purchase price, we have added the entry load, and at the time of redemption, we have deducted the exit load. Now, Samanathan, it is a very good point, and you will see when we shall discuss chapter number 10, that is foreign exchange exposure and risk management. Same logic will also be applied there. Because when I'm not just discussing, I'm just giving very brief. Because when a foreign currency, there are two rates. One is ask rate, another is bid rate. Ask rate is at which we can purchase a foreign currency, and bid rate is that rate at which we can sell the foreign currency. Now there are some bank charges are there. Now if bank charge make some charges, there are some charges have been given in the question. So in the ask rate, it will be added, and in the bid rate it will be deducted. So the same logic will be also applied there. So it was a very good question, and it was very important point. And now regarding the mutual fund topic, see, in a mutual fund there are two important things we can look out. One is that it is important from the investor's point of view, because see, why, if Jagbandhu sir has discussed with you all the nitty-gritties about the mutual fund. Now, when we talk about the mutual fund is basically a route for the investor to make some investment, small investor, especially for the small investment. And there are two type of generally questions are asked. In a one type of a question, generally some NAV in the beginning, some NAV again has been given in the end, then there was some capital appreciation or dividend has been given, then you have to require the individual rate of return. But in some of the questions that are likely to discuss in the forthcoming classes, where we have to calculate at what is NAV of the fund, because NAV of the fund is ultimately dependent on the investments made in the different kind of a security. And one very important element that you will notice, that one is that the cash balance. So cash balance is one of the very important element of our NAV calculation, and also the liabilities as well as expenses. So all this you will see how we compute the NAV from these types of questions. So I think Jagbandhu sir, in the next class this topic will be over.
Yes, it will be done.
Okay, so with this we shall complete our chapter number 8 in the next class. So student, revise whatever have been discussed in the class today. And if you have any query, Jagbandhu sir, just share my ideas. This is our contact number, and this is our email ID. You can contact us over the telephone, as well as you can send the email to us, or even you can send your query through the mobile app as well. So, okay, thank you, student, once again, and have a nice day. Thank you, Jagbandhu sir. Thank you.
Sir.
Thank you.
Thank you.
Thank you.
Thank you.
Thank you, sir.
Thank you. Thank you.
Sir.
Yes, session over.